then everything that the lender needs to know about me, it's so easily available, process it. So it's good for the borrower. And lastly, for the lenders, as we briefly touched upon in our chat while we were waiting, today when you look at the fintech world and a whole lot of these digital public goods and infrastructure, it's all a little fragmented again, right? So even for the lenders to take advantage of this lovely digital stack that we are developing as a country, even for lenders, it's very difficult and challenging to go integrate with each separately. You have one good unified platform. So it's a win-win progression. And coming to the fintech's point about banking, it's going to be very interesting. I was on the other side in the banks when, like he said, Mr. Gates said what he said in '94. I used to work for a bank where people used to come and say, in 5 to 10 years from now, your department won't exist, your job won't exist, most of the people in your team won't have jobs, right? Because the technology will replace those jobs, etc. We will go through those cycles. I hear similar stuff now about AI. Right? Just like with the economic cycles, right? We all go through the cycles. When you look at it in the short term, it looks much more intense than it is. But over a long term, it all evens out. So to sum up the last point on this, I think some of this infrastructure will further help the fintechs, who in turn will further compete, collaborate, or work with the banking system. It's a win-win for everyone to progress, I guess. Yeah.
No, I agree with you. Actually, just a word on this unified lending interface that the Reserve Bank is speaking about. It's a pilot. It's not yet scaled up, but the entire banking data is already digitalized. So if you're plugging on to the ULI platform today, the lending bank will know the borrower's entire financial, what insurance policies he has, what pension policies he has, what bank accounts, all that is available. Also available if he is a small business, what taxes he's paying, because the GST is integrated. What is not integrated is land records. If he has collateral of a land, that's not yet integrated except in some places. But where do the fintechs come in? If it is so well done, is there no work for fintechs? I mean, for UPI, we realized the fintechs came in. We pay by Google Pay, we don't pay UPI. We pay through Phone Pay, we don't pay so much through UPI. So fintechs still have a place over there. Just one more word before I come to Jay on the technology and safety aspects. Michael, have fintechs been able to... Okay, we'll let that wait. I'll come to the due diligence part in just a bit. Jay, as a regulator, I mean, you represent the regulator in this discussion. Are you worried about technology as creating sudden risks? Like, Microsoft 365 and CrowdStrike, suddenly you couldn't fly, airports, banks, everyone. What's the IMF point of view in terms of cyber risk?
Yeah, sure. So we are all aware of what happened on July 19. Windows machines worldwide began experiencing crashes due to a faulty channel update to CrowdStrike Falcon. Now, this outage was not triggered by a cyber incident. There might have been some threat actors who tried to take an opportunity, but this was really not. This was an accident. But nonetheless, there was widespread disruption that was experienced across sectors. CrowdStrike provides cybersecurity solutions that are reportedly used by some systemically important banks globally and also by critical FMIs. And so the impact on the financial sector was, while short, quite significant. So, the CrowdStrike incident brought home potential systemic risks in the technology domain that are really embedded in the supply chain, notably third-party service provision, concentration in critical service provision, and single points of failure. And I just wanted to spend a couple of minutes reflecting on the intensifying cyber threat landscape and what it means for financial stability. So we presented some analysis in our April Global Financial Stability Report in a chapter called Cyber Risk and Financial Stability. And basically our view is that although cyber incidents have not so far presented systemic threats, if there is a significant cyber incident at a systemic financial institution, this could pose potential macro financial stability problems. And in fact, central banks and regulators are already viewing cybersecurity risk as a material risk and actually as a source of potential systemic risk to financial stability. Now, one thing is there, which is whether we like it or not, cyber incidents are going to continue to occur. And what this means is that when in terms of response, while protection measures, ensuring that they are adequate is actually very important, it's really what the response and recovery preparations are, which is really of paramount importance. Things like, computer emergency response teams and their financial sector version, the FinCerts, and critical infrastructure protection agencies are already, but in fact in the future are going to play even more prominent roles. And at the national level, governments need to engage with supply chains to minimize incidents and to establish backup arrangements, not just with tech firms, but in fact with the power and communication sectors. I mean, if you mention regulation, from a central bank's point of view, in order to do its surveillance role properly, more and more central banks should begin expanding their vocabulary of stress testing and systemic risk analysis to incorporate meaningfully cyber risk stress tests.
I must add, I think the Reserve Bank is up on this game. I know of bankers who tell me that all that the central bank is asking them is, just give me your login and I'll check what kind of, process checks you have. So it looks like they're up on that. But just a quick question over there. The Reserve Bank in its, next 25 years, their Amrit Kal, plan, have said that they're actually going to develop a local database. That is, they don't want it on AWS or some other cloud. They want an RBI cloud or an India cloud. Way to go.
So, I think there are many views about this. I can see what for any nation state the rationale for localization of data is. It not only has national data privacy and security, issues, but also in terms of the ability to supervise. Big tech supervision is difficult. Big tech supervision from a
it's a sovereignty issue, actually.
Well, but it's also a supervisory issue, in the sense that big techs do not conventionally provide financial services in their home countries. From a home supervisory standpoint, therefore, this is not an issue. But in many emerging and developing economies, big techs do provide financial services. And the question is, how do you actually supervise these activities? If you have access and control over the data, you are in a much better position to do so. I just wanted to mention a couple of things, which is, of course, authorities need to step up on the cyber side. But actually, our work, my division has been doing this work for about 10 years, particularly in emerging and developing economies. And I think it's also that, the financial firms also need to step up. I think their reporting on cyber incidents to their supervisors needs to be strengthened. And supervisors in turn need to hold board members explicitly responsible for maintaining a conducive risk culture on the cyber side.
Fair enough. Fair point. Just as a matter of anecdote, Reserve Bank and other banks, other central banks around emerging markets were clearly worried when Facebook announced Libra. And it was a very big boon to them that the person who felt most challenged was the Fed itself. So they found a friend there. But Michael, just coming back to this cyber risk, there was a time when banks wanted to host everything in their own servers. But now you just have to go to cloud because it's simply expanded and the fintechs threw that challenge at the banks. What do you perceive? I mean, you have to share the data, you have to put it out there in the cloud. So how are you looking at this risk, which may come through fintechs, which may come regardless?
So I find the topic of cloud very interesting because there are so many different clouds. You have your private cloud, which is your own data center. And then you have a private cloud where somebody else manages the data center for you. Then you have a private cloud where you sit in a public cloud, but it's isolated, you sit in a public cloud. Let me just be clear, banks do not openly share data, full stop. We're probably the most regulated, and that's a good thing, right? We do not share data, right? So if anything we share would be metadata, completely anonymized.
I take your word for it.
So just on that one, we're not going to put on things. And so where do we? So we're in some markets we're in the cloud. So I'm rolling out a latest tech stack global payments platform, which is already in India, because India is a very demanding market. So you want to be on the latest technology that is cloud native. It is microservice enabled. You can parameterize it. It is a great system. It does sit in the cloud in India. It does not sit in the cloud in a few other markets because of local regulatory concerns, or shall we say considerations. So it's not one or the other. It is going to be all together, right? And more countries do actually go and require data localization, but it doesn't mean that you can't have it in the cloud. Because there's no such thing as a thing in the cloud globally, right? I mean, the data sits either in the country, like India is data localization, many other places are, and so we had to put more servers in here, which is a good thing, right? And fully understand where they're coming from. And then there's more global sharing, but generally it's anonymized, and that is something that probably will go from a supervisory perspective, will probably broaden beyond the banks over time, because that's one of the considerations regulators or supervisors have, that there's a bit of an uneven regulation at time, right? And as you said, I mean, you don't regulate some of the large tech financial services back at the home country because they don't want to become a bank or a fintech at home, but outside they do that. And I think that will get harmonized over time. At the end, I just want to emphasize that again, it is the collaboration that's going to make this all work. None of us can do that on our own. Also not the large tech companies. They probably have most of the resources. I want to say one more thing to fintechs. And our previous, or two previous speakers, and I have to look up. So Sri Mahavir Singh said something very interesting. He said the private sector and fintech are critical for further development and inclusion. I think fintechs have brought a massive benefit to financial inclusion and make more people bankable. And this is a great success and a great benefit we drive, and we can actually benefit from this together. So I think that's a good thing.
Absolutely. But just very quickly, this is out of syllabus question. Do you think, Michael, and I mean I asked Jay as well, like the Reserve Bank put the UPI as a public infrastructure, the cloud, which I think the Reserve Bank is determined to put in, will also be a public infrastructure. Will we see a lot of central banks doing public infrastructure? A quick answer, Michael.
Do we see a lot of central banks?
Central banks putting in digital public infrastructure.
Well, I think India is quite advanced, and a lot of countries are scratching their heads. In my mind, yes, you will see more because there are clear benefits to it, right? There are many different considerations at the moment. If you look into what central banks do with central bank digital coins, right? I mean, we participate quite in a number of initiatives. We were talking about Singapore before, connecting India with Singapore, Project Guardian from the MAS, Project Ensemble from the HKMA. So there's a lot of those developments. I would say it always goes at different speed. So there's different speeds to it.
All right, then I'll end that topic over there because we have 13 minutes. Rajesh, I think the big point, and you are, in CIBIL, you are looking at credit scores or designing credit scores. Do you think the big support that fintech can give to the entire financial sector is improving diligence?
Oh yeah, absolutely. I think that's very important. One of the key points, or I would say answers that I am yet to be fully convinced about is the differentiation that fintechs bring to the traditional banking system, or let's say overall across the products and whatever business models. So what exactly is the differentiator has to be defined well. I think so far what we have seen a lot of is convenience for sure. And because the fintechs operate primarily in the digital world, obviously there is much quicker processes, right, versus the physical processes. That's a no-brainer. So when you talk about due diligence, I think a lot of work to be done there. We spoke earlier about these nice platforms and data sets, but the real usage is to come out. And few areas where I think it will help when we talk about due diligence, right? We're talking about new to credit. And And we know that in India, given our goals on financial inclusion, given our demographic composition, right? Such a large young population.
Given our informal economy,
credit as
you don't
well.
think that fintechs will perform?
Absolutely. There's such low credit penetration. This is where I think there's a huge opportunity for fintechs, MSMEs again, right? And we'll link all of this to due diligence to say that how do fintechs use their innovations and their superior technology to bring in this due diligence, right? Now, it can be traditional data, it can be alternative data, it can be behavioral data, obviously within all constructs of privacy and consent based, right? So I think when it comes to due diligence, what new information can you bring which can give more confidence to lenders? And my last sentence on this, I think the fintech world we can probably say that the fintech world has really arrived or reached its point of arrival. I think I would kind of accept that on the day when we say that new to credit versus existing to bank. On the day that we say these two have been equated. Because the only real difference is only information. Lata could have an account with a large bank. She could have a savings account, credit card. She could invest through that bank. They know everything about her. So it's easy for the bank to do due diligence on her, right? But let's say there's a youngster who's just got his first job and he doesn't have that many accounts with a large bank. That's a great opportunity for fintechs, but that is the real innovation for me. I think just information moving quicker for a faster process, it's just the beginning then.
Is only incremental.
Yeah,
but if you want it to be paradigm shifting,
Absolutely.
it will have to be for a new. Well, if they are able to tell me how much electricity that a person consumed, how quickly he paid his telecom bills, or what is the size of the telecom bill that he is recharging every day or every month, then that will be a new to credit advantage. And I think fintechs are out there to grab those kinds of challenges. Incidentally, somebody in the US recently, when I was there, told me that they can give me a loan looking at my Uber score. So, that's not asking for my CIBIL score, asking for my Uber score.
Yeah, I'll just step in again, Lata, for a minute. When you think about this probability of default, right? When we say probability of default is not some standalone and isolated behavior, right? Default is a function of our general behavior, how we generate cash and how we spend it. So things like this Uber score, right? There could be so many other aspects of my behavior which could indicate my probability of default other than just the regular bank account, bank balance, etc.
Absolutely, absolutely. And there's a lot of difference between whether my Uber score was 5 or 4.95 or whether it is, 3.
Yeah.
So, the Uber score could only go that far. But it's a very big innovation, I thought, which the fintech brought. But, if AI becomes a reality, then, the whole thing changes. The fintechs can be game changing. So let me use the last 9 minutes, 3 minutes apiece on how do you see AI. Mike, you go first. Are you already using AI for diligence, customer identification, and how do you see it?
Yes, of course. We've been using AI for many years. All banks have, I think. So so I don't know. We're talking a lot about AI these days, right? Well, actually, what spurred this is large language models, which has changed the dynamic of AIs, and is not the traditional AI. So we use a lot of the traditional AI in many aspects, whether this is payment repairs, whether this is pattern recognition, whether this is fraud detection, and we're working with a number of fintechs together. So quite often we find their analytical capabilities and their ability to extract data from sometimes legacy systems quite advanced. But it has, for us as banks, it always has to sit inside. So even if I sit in a cloud, the fintech extracting my data, analyzing, will always be sitting within my environment and it will not leave my environment. So we've had actually discussions with one of the largest data analytics company in the world, and they are fabulous in deep AI, but we can't use some of it because the data would have to travel cross-border. That doesn't work for us. And certainly there's a sovereignty issue, there's a jurisdictional issue. So the other piece on AI is, I think people with large language models, of course, it's all predictive, right? So it's not predictive, sorry, it's the next probability. Generative. Now, if you have, with generative AI, now if you have 700 billion nodes in some time in the next generative AI, it will be a lot more accurate, but it is still not factual. So I think the way we all need to look at AI is IA, so intelligence augmentation. So we got to use AI to be better, right? We should not shy away from it. So everybody should have, wherever it is, any of the AI. I don't want to name any of them, but and play around with it. It is quite fascinating what kind of videos you can create, what kind of mails you can create, what kind of CVs you can create. It looks a lot better than when I write it myself. Now I don't need one, but it's just fun. I just think it is fascinating and it is critical for us to use it. It is also tricky because the reliability, and this is again where in banking it will potentially be a bit slower in some areas, because you have to have the data governance and you have to have absolute statements there. So there is a whole evolution and discussion with the regulatory body, which is a very healthy one, and so I very much welcome that.
Your thoughts, Rajesh, as a person always grading people for their credit worthiness, do you think that you can AI will help us find more credit-worthy MSMEs, help the MSMEs in some fashion? How do you look at AI?
Well, absolutely. Again, it's just the next progression. I say this because in 2005, in my prior organization, when I started analytics, right, we went through the same set of apprehensions when we built a whole lot of credit models. I remember the first few supervisory audits in the bank, they used to ask me, are you doing credit risk or model risk? Right? Because so many decisions, transactional and strategic, are being aided by models, right? So it's the same thing now in another form. The form factor has progressed to AI, right? And I go back to the same principles on hand. All of this comes out of some innovative thinking. So first is responsible innovation. Second is obviously transparency, be it a model here or an AI model or a regular model, analytics model. You want transparency, you don't want black boxes that don't explain things. Third, obviously biases, because all the development of models, be it regular models or AI, we use the existing data set. So inbuilt biases will come back into that. These are well known. So what we did then as caution, it's the same thing to do again now on the technology itself. And couple of quick points. I think it's about when you go into new technologies, I think it's super critical to calibrate that well, right? So first you do your champion challenger kind of test. You have your existing models which are used for years. When you develop a new model, run it parallel for some time. Don't go live immediately. Test it thoroughly. Good model governance in terms of the right kind of decisions being taken by the teams making those models. And then I think it's also super important to monitor the performance of the models in the initial phases, so that if there is some calibration to be done or recalibration, you do it quickly and don't wait for the damage. And India is a large country and you could do a few million loans in no time. So I think it's important to have an incremental approach where you keep testing before you grow very blindly. But I'm sure in a few years from now, we'll be sitting on a forum like this and there'll be something else and I'll have similar story about AI again.
Yeah, exactly. You said incremental, but technology is never incremental. It is always game changing and paradigm shifting. But, what is the received wisdom in the IMF? You're seeing several countries. What's your view of AI? Is it destructive, constructive, what?
I'm going to leverage off, what Michael and Rajesh have said. There's no doubt about the enormous social and economic benefit. It's not a new technology. As Michael said, machine learning and AI have been around for a long time. And so we know already that, it can fundamentally reshape and make efficient a lot of provision of financial services. It can reshape client interfaces, it can enhance, and it has enhanced forecasting accuracy. You were talking about your Uber score being relevant for your credit pricing. I'm sure that those guys are basically extracting large and big quantities of big data, putting it into machine learning algorithms and basically talking about correlations. But that's just one example. It can also improve risk management. And it also helps supervisors do a better job regulating and supervising firms, and central banks fulfill their mandates better. So we know all of this. The concerns we have are also well known, and those arise from risks that are somehow inherently embedded in the technology. So things that we are familiar with are embedded bias, opacity of outcomes, robustness relative to cyber threats, and privacy. And then there are new things. In generative AI, for example, issues about homogeneity and risk assessment. I think Rajesh and Michael both hinted at those things. And how that affects credit decisions. There is an efficiency element, there's a stability element, and there's a fairness element to some of these things. So I think overall, our view is that it's very, very welcome at a very broad level, together with preparation that can help us capture benefits and also mitigate the potential risks.
Well, I think our experts have traversed a very, very large terrain, and I would be too ambitious if I tried to wrap it up or summarize it. We began by saying that the global environment for fintechs don't take things for granted. It isn't as if the funding winter will not revisit us. So beware of that. But beyond that, the financial incumbents, if I can call Michael and Rajesh that, do find fintechs most useful and see a vista of opportunities in which both speed and safety can be improved by the fintechs. What space and what form AI takes, we do not yet know. Will it change the global macros itself? We do not know. Will it make all the jobs that we are doing be done by 2% or 10% of the population and the rest of us only get a basic income from the government? We don't know if that's the world macro, or whether it will be much more pleasant and all of us will have great more leisure time and comfort. That's something we await from the fintechs to answer. Thank you very much. It's a photo finish with 10 seconds to go. I hope the organizers are happy with us.
Thank you. Thank you so much. Ladies and gentlemen, a great round of applause for our dignitaries present on stage, and may I request you to please step forward, and of course we'd like to applaud you for the timely finish, but trust me, we have something exciting on the other side, so stay tuned. Meanwhile, we can just request our panelists to come together for a group photograph. Let's create this